And so that's why it's a very limited requirement specific to the borrower. And a lot of it actually is tied into the property. And so with the short-term rental, 100% of AirDNA is a third-party data aggregator. They look at comps and they say, okay, well, this property is projected to make this much revenue based on really it's a bedroom and bathroom count as like the primary consideration they use. That's neither here nor there, but we use that value to then qualify the mortgage. For example, if the AirDNA is saying that this property is going to make $4,000 a month, we want to see most often that their PITIA, their principal, interest, taxes, insurance, and association dues or HOA dues are less than that $4,000 number. Effectively, that is cash flow positive. And so what comes with that is if they're an experienced STR owner, we can use 100% of the AirDNA value to qualify them for a mortgage. Or if they're not, then we'll use 75% of the AirDNA value to qualify them.
Okay, interesting.
Okay.
Yeah.
That can be tough because it's really hard to get like short-term rental numbers. So I bet it's tough for y'all to kind of go, "Ooh, I'm not sure."
Yeah.
There's out to run STR numbers.
Yeah, I mean it's a wild west too with short-term rentals. I mean, you go to some vacation markets and they don't really have a good delineation for like a beachfront property that is almost certainly going to rent for more than one that's even just 2 blocks away from the beach, right? Even though they have everything else the same amenities, the same bedroom bathroom counts. AirDNA is going to say, hey, this is probably going to generate the same amount of revenue as this other property that is a beachfront property. Doesn't really consider very like edge cases like that. That's one of the few edge cases. But outside of that, we've found it to be very highly accurate. I mean, it's accurate in 90% plus of cases. And so that's why we do add a little bit of a haircut for brand new borrowers, brand new STR owners, because there is some uptime to understanding the nuance with those platforms like Airbnb and VRBO, and really effectively managing your short-term rental.
So how does one qualify and say, hey, I'm a sophisticated investor? What do you use to qualify that?
Yeah, so the delineation there for an experience to get to 100%, we want to see that you have 12 months of operating history with a short-term rental in the same market. And the same market's typically plus minus 50 miles away. I mean, we've done like beachfront property in North Carolina. We've qualified them for a beachfront property in South Carolina because it's going to be a very similar market.